Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for natural gas. So back to the technical analysis, we're currently down 4.4%, and on the 1 hour chart, we're oversold on the RSI. And as for the 4 hour chart, we also see the same action here on the RSI as well, oversold. If we expand that further onto the daily chart, what we have here is we're starting to approach to negative MACD, and we saw divergence on the daily MACD. And now the 9-day moving average, this blue line, is starting to diverge onto the 18-day moving average, this purple line. So at the moment, if we do continue this downward momentum, the next possible resistance, or I should say, let's start off with support, will be around a price of, say, $1.61. Reason why, we had previous levels that acted as support that dated back to May 13th as well as June 16th. So again, that is around the price of $1.61. And we did bounce right off that. We do want to test that level again. And as for resistance, if we do reverse and head up higher, the next possible resistance will be where the 18-day and 9-day moving averages converge, and that is around a price of $1.73 or 74 cents. So if we do manage to reverse higher to hit resistance, that price level to the upside is roughly around 5.4%, and to the downside to hit the next support, that is around 1.9% to the downside. So now let's examine the day-by-day probability model. These models are available in the link below, so do check it out. As we progress to the 5th day or a week of trading, we have a 44% chance for natural gas to climb between 0 to 9%, and to the downside we have a 40% chance for it to fall between 0 to negative 9%. And on the extreme case, to the downside, a 20% chance for it to fall between negative 9% to negative 19%. So now let's examine the day-by-day forecast for natural gas. So what we have here is 1 day out. That will be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, and 5 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and below is a trend that we found from the line graph above, and this trend dates back to June 6, 2016 to April 4th, 2016. So let's begin comparing both the trends. So on the current trend, we start off at the upper Bollinger Band, and then towards the end we average above the upper Bollinger Band. So we have 1, 2, 3 points, and on the trend in question, we also start off at the upper Bollinger Band and end above the middle Bollinger Band towards the end. So what we also have is 1, 2, 3 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. And the model that we just examined, again, it was January 6 to April 4th, 2016. Back then, natural gas was down roughly around, say, 4.8%. If we head back to the day-by-day probability model, the outcome and forecast coincides with the standard deviation of 40% chance of it falling between 0 to negative 9% in the next coming days. If we examine closer on the technical performance of each trend, on the current trend, we're down 45% from monthly high, up 10% from monthly low, down 4% from 10 simple moving average, down 1% from 20-day simple moving average, and down 8% from 50-day simple moving average. Compare that to the trend in the past. Back then it was down 35% from monthly high, up 15% from monthly low, up 3.6% from 10 simple moving average, up 5% from 20-day simple moving average, and down 71 basis points from 50-day simple moving average. So among the two trends, there are technical differences among them. One of them are the 10, 20, and 50-day simple moving averages. So those two trends are different among themselves, so do keep that in mind. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.